Hello, hello, hello. Really pray my people are having an amazing, blessed day. It is a Thursday morning. It is 12 minutes past 9 a.m. here in South Africa. And we're going to start very simple. What's my routine for the day? So if I get on to 3 to 4 o'clock hour, what do I do prior to that? So very simple philosophies, nothing much. So I try my best if I'm not going to use any higher time frame analysis. Like for example, I'm not going to start on a daily. What I usually do is I'll go straight to an hourly chart just to get a sense of narrative and what the market is currently building in terms of sentiment. And I'll only focus on 3 candlesticks, and that will be the clock. That will be the 1, 2, and the one that's currently printing. So what I'll do is very simple. I'll mark the high for the clock. Make sure it's bold, and I'll count the high for the 2 a.m. and I'll get the low, and I will get the low for here, and I will get the last low for here, and what I'll have is the high for the previous hour right there. No, this has to stay blue, and this has to go red. This has to go red. So just this has to go red as well. So what do I notice within this small pocket of PA? Where a beautiful open trades higher, takes out buy side, displaces lower, engineers sell side, trades back, takes out sell side, engineers buy side, and we're currently within the 3 to 4 o'clock hour. And my question to myself is, are we going to take this high out, or are we going to take this low out? That's the first question I ask myself, depending on where I am within the spectrum. And if we take out this low, what's pulling it lower? I'll look for fair value. We have a beautiful inefficiency right here, this low, and we have fair value. So could we possibly be gravitating to this so that we see higher prices later on in the session? Or are we going to chase this higher right here? So what does that mean when I say, are we going to chase this high here or this low? This is the current dealing range we're in. This price action is inside this current dealing range. High was taken, low was taken. It's not, I won't say it's a dealing range, it's just a range in and of itself, because no sell side was taken. But if you go to a 3-minute chart, then it's a different story, right? Where it does become a dealing range. Why? Because sell side was taken here and buy side was taken there. But all this we can see just from watching what happens on a hourly chart. So now my goal is to see, are we going to continue going higher, or are we going to continue lower, chasing this low, and ultimately this? And if we can, what narrative could price build? Could we trade here so that we can take out these relative equal highs again? Are we going to trade much deeper into this fair value before running up? What time of day is it? What day of week is it? What news event is coming out? Because all that builds narrative. But that's the hard part. I'll just focus on the easy part. So once I have all these levels predetermined, I can go straight to a 1-minute chart. I don't need to do top-down analysis in any shape or form. And my main objective is, let's do this before we go to a 1-hour chart. Before we do that, since we've identified this as a dealing range, not necessarily on a 15-minute chart, but on a 3-minute it is, we mark that and we have quadrant levels. And then I'll go to a 1-minute chart. And then from a 1-minute chart, I'll ask myself, okay, we've traded into 75%, beautiful. What time did we do it? First thing we did it at 52, don't like that. Swing high was formed at 57. What is 57? Multiple of 3. So now I'm looking, is price going to make a willingness to get to this low, or to get all the way back up to these highs? There's so much on my chart. What the hell? Excuse me, I'm sorry, like there's so much on my chart. But anyways, there's so much on my chart. Let's just change this for perspective. It has already been tagged. This is unmitigated. No, it's untagged, unmitigated. Anyways, this buy side has been tagged. Mark that in dashes. This one has not. So okay, then sell side has been tagged. Just move it here to make it a bit more cleaner. Okay, this one move it there just to make it a bit cleaner. And we have sell side there. So now when I'm on a 1 minute chart, first thing I go to, okay, swing high was formed at 57, beautiful. I love seeing stuff like that. But anyways, I go to the 3 o'clock. What have we done? We have opened, and traded lower. Okay, so are we going to play a power of 3 where it's open, trade lower, retracement relative to this from swing low to swing high? They're right there. And we're trading into 55% deeper, 65 all the way up to maybe 75% before we go higher. Is that what's going to occur? But what also I'll do is on an hourly chart, I just want to show you what my eyes focusing on as well. Inside here, I'm watching this week, right there. So in my head, we've touched 50% of that wick. We've traded below 50% of this whole retracement. So this could be a potential power of 3 for us to see higher prices and chase the 2 a.m. high instead of the 2 a.m. low. But we want to see that as time converge. What time are the swing lows being engineered? 04, this one, 11, 14, 16, 17, not conducive, I don't like these. But why is it doing this as well? Why is it showing such PA? Never forget what trading day of the week it is. CPI, so the likelihood for cleaner PA are lower. So what I'm looking now is there any inefficiency here that I can look at that can support price where it is now? I don't see any. So it's low probability trading for me if I want to go long because I need fair value. So now I'm going to watch, okay, where price currently is within this small fair value, which was the only fair value that's formed once the 3 a.m. prints. So I'm looking, are we going to use this right there? And are we going to respect it the way we are now? And are we going to see lower prices and chase the AM lows? But now, obviously, I can't execute now. But I'm getting in sync with what the financial market is doing or what I expect it to do relative to what prices are doing. And now I have a point of reference for me to focus on. So this becomes a point of reference for either going short or going long. So if I want to go short, let's say I came to the conclusion that we're going to see this low instead of this high taken, then I'll be short here at 0315 because the 3 minute interval, I'm expecting it to print a swing high as it digs into fair value. And then we begin to see rapid repricing right there at 50%. I like that. But then we get to see lower prices. So I'm watching that. And if I want to go long in any shape, way, or form, I want to go long when this plays inversion. So since I don't trust that we'll tag 50, if I don't trust that we'll tag 50% of this fair value, then what I'll do is I'll have to wait for this to print its function. Once it prints in function, it plays inversion. Once it plays inversion, I go long and target that. Let's say I got in and I'm very confident that we're going shorts. I would have been smacking shorts here because I believe this is the first fair value offered to us as we started delivering to the downside. So those are the two things that are currently in my head. But I don't like that. I like having one mind and one mind only, excuse me. And for now, I want to stick to the bias of we're going long and we're going to take out this high and this swing low won't get tagged. That's the bias I want to stick with if that's the one that's currently going to play out. And I'm going to look to see if are we going to trade up above this, use this as support to see spooling up to buy side liquidity. So now as I'm watching that play out, my first mode of approach, the first question I ask myself, does it offer 20 handles? This is a 16 handle, 17 handle potential execution. Do I want that? Nope. I don't like those. Let's say I'm looking to target all these relative highs and obviously the previous high. Is that going to happen within this PA that's going on now? I need to ask myself those narratives. But then since there's no 36 handles, really miss me. Anyways, as I was saying, but these are beautiful PA for you to put your stop loss really, really tight because the range is so small. This is a way you can have a freaking 5 handle stop. And then you're targeting 15 handles, and you're doing that up and down as price begins to print. And those are very, very important, especially for trading and executing. But for now, sorry, it's still bearish until it gives us the sentiment that we're bullish. Remove this. I'll just have this swing low. I don't want to have too much on my chart, so I'll have like this swing low for reference because this marks the 50%. Or it's just a swing low below 50% as engineered liquidity. And we're waiting patiently for this to play inversion. So I do this every day. I go down for 1 hour and I just mark those because this is one of my favorite models. It's one of the easiest to spot because when you can spot fair value here on the 2 to 3 o'clock hour, it becomes easier for you to see where is the market drawing to, where is it going to, is it going there or is it going here, are we going to chop in the middle? Those are the things we need to ask ourselves. But that's kind of the small procedure I follow, and I wait. Usually I just have this, and I'll just kind of wait and see what price does relative to the PD area I'm studying. But I already have a narrative, I already have an idea. But I want it to play out first if I don't trust that idea. Because you're also going to experience this. You're going to go in and you're going to think, I might be looking for longs, but it's not. I love that. Look at this. Just see. So I was watching that there. Touch the high for this. Oh, the low for that. So that perfection, and then we're getting a displacement. The next fair value that forms, watch that and see if it's going to trade back into that to target these lows. I'm mentally noting that as price begins to print. So what this process does is it helps you get in sync with the algorithm. It helps you find your footing. You're not afraid. You're not anxious. Whether you're wrong or right, that's not the goal. The goal is, can you read price efficiently? And when you're wrong, do you know where you're wrong? There we go. So you want to see, does it engineer fair value here? And once it does that, do we trade back into that to seek lower prices? You want to see a bit of respect of this swing low. So now you ask yourself, from there, if it's going to offer me an execution at all, from here to there, is the lemon with the squeeze? If not, don't execute. If it is, then perfect. But if it's not, then you'd rather just stay out. And also my weakest models are rejection blocks. So if this turns out to be a deep turtle soup and we don't really take out this low, that's my weakest model. I failed dismally at an attempt to master that. Just marking this for nostalgic sake. So you see that? How it's respecting that level, that pause. So right there, personally I would love to go short here. But what I'll do is I'll mark it, I will study it, but we have fair value here, but I want to go short right when you touch that here. But in order for us to be a bit more realistic, what we'll do is I'll study this and see if this will give me a short. Top with the stop just above the swing high. This was a perfect short. But anyways, and I'll be targeting this baby right here. Remove this. I'll put it back. So that was a perfect short there. So it was a bit fast, so I don't know if you saw it, but it was very quick. But when I pulled that line, I wanted to respect that level. That's what I meant. So I just changed this to red, blue because it's a stop loss order, and then red for target, and change the color here, the tonality just small. So now we're just reading the narrative, and this is the essence of tape reading. So once it trades back into fair value and offers us a potential, even there, touches again, that's another short. But what we're doing is we're watching to see if are we in sync with the algorithm as it delivers. Is it respecting our levels? Is it performing the way we would want it to? And if it does, and if it's performing, is the juice worth the squeeze? You know, are you willing to put yourself in a position of risk using such principles? And if I'm wrong here in any shape, way, or form, that will kind of give me indication. So I'm already in short here. So it will give me indications of whether I am on side in terms of reading the narrative, whether I'm on side in terms of reading the delivery schedule, whether I'm on, it's not going to make me money, but it's just going to boost my confidence and the trust I have within my analysis. But what time is it now? The time is 03:27. This is a 3-minute interval, so you're expecting this to be a swing high. If I was being facetious and alone, I would have journaled and moved my stop here, but there's no need for that. and then the next candlestick I want it to open but not trade above this high, and then we begin to race for that low. And what we do is we note from where you entered short to liquidity, it's only 11 handles short. In terms of risk parameters, you're only risking about 4.5. Is this worth the squeeze? In more fluent markets, this could be easily 20 handles, and this be the multiplication of that. So, but you need first to be very patient. You need to go slow with the process. You need to start with a very structured approach where you're looking at liquidity and you're looking at fair value. And that's where your strength lies. Your strength lies in the ability to seek and identify fair value in any shape, way, or form, and have the foresight to kind of read the room, see where we're going to deliver. That is perfect again. I'd love to, but the things I can't do this with NQ. I'm not scared, but I can't. But I'd love this to be the high for this candlestick that's currently printing. I can do that better on ES, but it's tough. It's tough with NQ. But as expected, this prints what, a swing high at fair value. Then you're going to expect to see it spore higher, and we should reach target before 0333. Personally, I think we're going to hit it at 0330, but we'll see. So now what did it do? It engineered the swing high. So you're right on narrative. You're getting there. Even though I expected this to hold price and send it higher, that tap of that previous low told me everything I need to know, retracement, etc. I want to see if this will provide an immediate rebalance right there, and this becomes the high for this candlestick. TP hit 1 minute too early. But anyways, so we did blast through target, traded into fair value. But the point of the conversation, and now the trade setup is finished. You're done. That's it. There's nothing more, nothing less. And you're going to do this every day. But now what we're going to try and do is, okay, we've pierced liquidity. And when you go to your far left, do you see any fair value points of interest that could support and send price high? If you don't see it in any shape, way, or form, looking at this PA, it's not conducive for executing. I have this wick here that I'm watching as well. But there's so many things to focus on here. But the main gist of the situation, if you really want to get to the cream of the crop, you need to kind of have a structured process of, are we going to target the low, are we going to target the high, and where's fair value? Well, the moment you identify it, you play that as the builder of your narrative. It's not guaranteed that you're going to go long or you're going to go short there, but it's your ability to read it before. This is beautiful, man. This is so beautiful. I'm sorry. But literally, the goal is to see and then be able to see this beforehand. And what you're going to do is, when you're looking for your 20 handle model, does it offer you that? From high, obviously you won't catch the high, but just from here to there, it's a clean 23 handles. Let's say if you used that swing high, exactly where we entered, and this was not your target, and you were targeting a normal model of 20 handles, that will be mine done for the day using time and price. You could also just use price and enter it 26 if you had a limit order, but this is how time plays a factor. But that's kind of the simple process of how you can kind of identify, or you just try and get in sync with the financial market. But the problem comes when all this was your only expectation, like 20 handles, and you're looking for a high frequency algorithmic signature that you can execute on. What ends up happening is, once target objective is met, you are not satisfied with it. Now you want to do something more. Now you want to trade it back to those relative equal highs, or you want to do this, you want to do that. Now the narrative begins changing once you have made or lost money. And now you want to, just because you see in a very inexplosive move low and we blast past your target, now you want to hold for longer. But that was not the initial intention. The initial intention was from here to there. But then when you're studying, especially when it's CPI day, you need to tone down your expectation and just go slowly, go ease into it. Don't really rush it. But that's kind of the gist of it, my good sir. And we'll take it from there. Some of those tagged. Let me use this buy side instead. It looks creamier. So now, okay. Now what you do is, I'll mark this. This becomes the first breaker. Swing high, swing low, or that swing low was taken there. Also, that swing low was taken there, and that high. So now what I want to see is if we're to, oof, I love that. If we're looking to see lower prices, does this send price lower? There is no fair value here. And what you're going to do is you're going to mark it. What time is it? Oh, 3:33. You mark it again. You remove this narrow because it's already played out. And you're watching. Are we going to use this? Right there. See this? Right there. So it's a study because it's not guaranteed to do it, but you have to make these case study. Right? What you're watching is you can have it above the swing high. You can have it above any swing high. Preferably, I'll use this candlestick instead just to be a bit more facetious. Okay, so if you go short there and remove this because we'd already performed the immediate rebalance, and now we're watching, is this going to play inversion or not? Meaning, are we going to use this fair value that we're in now, the small baby right here? Meaning this is a turtle soup, so we're starting to see if that's the case. Right there. So since we got short here, we're looking for points of validation for our shorts. This is the first point, fair value, balance price range. So we're looking, okay, we're bouncing from this fair value right here to that fair value, which is where I went short, printed a swing high, or 3:33 as expected. But now what we're looking is, we wanted to disrespect this fair value, meaning we want to race through it and then maybe retrace, preferably not, and just melt and go to target. What you do again is you mark from here to there is 12 handles, is the lemon with the squeeze. From up here to up there is the lemon with the squeeze. Why? Because when we broke the low, you're just expecting it to go low. It's not guaranteed. But since we have a higher time frame objective, which is this one, we can stay true to the point that we're going to see lower prices. And you keep doing this over and over and over and over again. Sorry about that. I hope I wasn't on mute the whole time, you know. That's my biggest fear. So this is the type of PA you don't want to see. So once you start seeing things like this, where we're going back to your initial point of entry and we're staying there, those are low probability. And it's not really low probability. It just depends. You need to check the economic calendar. Is something wrong? Is there something stopping the efficient delivery of price to liquidity? And once we reach fair value, we disrespect it and color more outside the lines than we usually do. And the retracements are far deeper than you would like them. From here to there, if this is a retracement, it's 75% plus retracement. Are you comfortable with those market conditions? If not, don't execute. Notice how we stop right there. That's beautiful. So now, if we trade above this, we're looking to see does this play inversion. And this becomes the low for the 3 to 4 o'clock hour. That's what we were looking to see. If it doesn't, once it stops us out, that changes the narrative. It changes it. If we're not stopped out, everything, let me just not change it because now it will confuse you. But as long as everything remains intact, we're going to see lower prices until we break above this high, preferably this one. And we come back, and even this, we just switched the market structure. It could be. And now we're looking to see, are there things that are going to disrespect our narrative? And we're going to see all these two relative equal highs get tagged, meaning we've taken out 2 a.m. low, and 3 a.m. has formed the swing low for the session, and we're going to target 2 a.m. high. That's kind of what we look at, day in and day out. Notice what time is it? 39. So you want this to be the swing high. If I was alone, what I was going to do is I'm going to move my stop loss right here. And if the next candlestick stops me out, I'm okay with it. But we'll keep it a buck and leave it where it is and not change it in any shape or form. But I'm journaling. So when I journal, I do this in my journal. I move it. I don't need to be in an execution. I don't need to be in a live trade for me to know I know these things. I just need to see it every day and trust that it will play out. Trust my levels, trust where I put my stop, trust my execution, my analysis, and just turn this blue since we're above it. So once we take out this high, the probability of me being efficiently removed have shot up to 90%. So as expected, this prints a swing high. Then use a call. This prints swing high. No, okay, let me just use price then. This prints the swing high. When I went short here, they printed a swing high. When we went short here, printed a swing high. So I'm right on time, but what's making price a bit not overzealous? Watch 0345. So I think 0345 will make an attempt to go see lower prices, but you need to be well aware of what's on the calendar, because this level of, I won't say intricate detailing where you can predict the swing high as the candlestick is printing, you can't do that if you're always trading. If you're in a trade and you are short here on a live execution, I'll be more inclined to be frustrated at the retracements than trying to anticipate when the swing high is going to form relative to where I put my stop. Hence, we do these drills every day. You don't need to be in an execution to learn how to execute, right? And that's the mistake I did when I was developing. I never spent time doing this, and this feels so calm, mellow. It's very personal in terms of journey, in terms of you reading what goes through my mind, when I can get it wrong, when I can get it right. And it's not scary in any shape or form, but it's intriguing to watch. as it plays out. Watch where my potential mistakes could be and how I navigate through them. And you need to do the same. Where are you going to make potential mistakes? Where does your majority? I don't like that. Why? What time is it? 03:42, because this could engineer swing low, next candlestick opens, and 45 displaces higher. But I want 45 to displace low because I'm already in a potential tape reading short. But you don't want to see such PA. You want to see such candlesticks close below the previous ones to show more willingness for lower prices. But we'll see as it prints. So now when you're studying, you're always gauging, am I on the right side of the market delivery of the market efficiency paradigm? Am I watching the right levels? That's very sensitive to blue level. So, but you want to watch those things and you want to be well aware of them. So right now my brain is scanning for points of invalidation. Just change this because now my eyes focus on it so much. Personally, I would have loved it to close below that low and below the 42 low. I don't like that it didn't, but it's okay. We're waiting for 45. Personal note. It's nice. $40 left. So you really want to see 45 make an attempt for this low here. Failure to do so, probability slowly seep out of favor, and we might have to wait for the 10:03:50, which is 5 whole minutes. And preferably, I wouldn't want this to print a swing low. That will make it even lower probabilities, but we'll see. So if the next candlestick opens and takes out this low, probabilities are still in my favor. But if the next candlestick opens and doesn't, then probabilities shift out of favor. But the main area of focus is this fair value and that price, which is also fair value, but in a different form. So probabilities are still in favor, even though 45 didn't really displace the way I wanted it to. So now what you want to see is this play inversion. So if it fails to play inversion, probabilities slowly shift out of favor. And you want it to race for this low. But I want you to notice something. How are we going lower? Is this a low resistance liquidity run, or is it a high resistance liquidity run? High resistance. So if it is, you ask yourself, why is it engineering this? And usually when it engineers a high resistance like this heading into the 50, then it runs it all. So you need to also be well aware of those. But you don't like it when it disrespects like this. You don't want to see that. But probabilities are slowly sheeping out favor, and this turns blue again. But now the more what you don't want to see is you turning this blue and red, blue and red, blue and red every time. When you do that, those are low probability market conditions. Or when it does that for me, that means I'm reading the tape wrong, or I'm reading a different date, and that tape is not the one I can read with the level of efficiency that I've mastered over time. And it's best to kind of stay out. But you see and feel this information without even being in an execution, without having to be in a demo trade or a live trade, just really watching the tape. So personally, this swing low for me at 48, I don't like it. I genuinely don't. Personal note for myself, right there. Interesting. So this level is still very, very important to me in terms of supporting price. So personally, I don't like when I see a candlestick close above there, because we've already done it here, and then we've traded below it there. So as long as no candlestick bodies are closing above there, I'm still Gucci on the shorts. So we're patiently waiting for this to play inversion again. So now that we've entered the macro, what you want to see is spooling to one of two things: fair value or liquidity. What do we have here? Do we have any fair value that you see within any dealing range or this whole range you're looking at now? We do have them, but they are mostly inversions. But what I do is I'll remove all these things. You can remove. I'll put them back on just now. And from here, we are going to do one of two things. We're either going to make an attempt for this low or make an attempt for this high. Personally, I'm already in a short based on all the narrative I've built, everything. But before this time hits, we would have already touched this, or we would have already touched that. And I'm content with whatever happens. So here is when the spool, this was all consolidation or whatever, but the spooling for liquidity should occur and will occur here. I want you to note something as well, personal note for yourself. 51. What does it do? Anyways, then we can put all those back on our chart. So it hasn't played inversion yet. So already, when you see such PA on any inefficiency you're studying, there's two things. It could be the wrong inefficiency. Secondly, it is showing you telltale signs that there's more time distortion than necessary, and we're going to maybe enter consolidation, or we're not really going to do anything, or this could be the swing low smart money first, and then we're just grinding our way higher, and we're retracing always plus 80% retracement, but we're always grinding somewhere. So when you see this, these are not conducive for trading, so you just sit and watch. And the more I keep switching, I'm just switching. As soon as a body closes above, I switch below. Closes below, I switch red. Close above, until we get that massive spooling. Could occur at 0 o'clock on the dot, which is what I expect they'll do, but we'll see as price continues to print. So now what you want to see is, does it make an attempt for this high, or is just this a deep, deep premium where it retraced from that swing high, that swing low? But I won't put the fib on, but you want to watch that. Now you want to watch, is it going to use this as support with the next candlestick open, trade into fair value, which is where we entered short, and spool higher for liquidity. It has to do it. It has to either chase that or that before 0410. Preferably, obviously, I would have loved it to start displacing lower, but you don't always get what you want, eh? So until we get a body close below that body low, this is still bullish. So now you want to see, does it trade into just like what it did there, a small push, or does it go deeper, but that's just small is enough? And does it make an attempt for that high? Ultimately that high, and obviously our stop loss, because that's where the liquidity is. Preferably I wouldn't want to see that. So I'd like a body to form here. Then I would like to watch, does this play inversion? Again for shorts. That's a swing low, 03. Then watch it spool for that and that. But notice how we're respecting the body low. We never closed below it. If we did, then it was going to be very bullish signatures, but we didn't. Trade back into it, 03, o'clock, 03. Watch 05 and 06 displays for, if it's going to do that for higher prices, which is what I think it will do. It's giving me those vibes. So preferably, I would love this to be the high for this candlestick that's printing, and we never target stop loss. So what I'm looking is, will the next candlestick open, maybe trade to 50% and then race lower? If not, 06 will just blast through stop loss, and then we need to change narrative. I'll see if I can grab that 50% touch there. Watch to see if it's going to start spooling higher. But I don't think I'll be able to do a third one, so I think 2 is enough. But just for case study purposes today, this is a nice long here, and that, but this I didn't like this 48. So interesting. Here's the color. So now I want you to notice something. There's a high probability execution or low probability execution from point of entry till now. For 33 minutes, we've been stuck from the range low all the way to the current range high. Range low after entry, range high. We've been stuck in a 16 handle concern. So it's not conducive for executing. But you can still make money, but is the lemon worth the squeeze? Those are the questions you need to ask yourself. Personal note, watch the body close. Crazy. So now that plays inversion. I don't know whether to classify this as inversion or not, but I'll take my chances. So technically, it has already performed this function. We've traded buy side, sell side. I wanted more animated. I wanted this range and obviously the range high there, but you don't always get what you want. Interesting. Personal note. From predicting whether it's going to take out buy side or sell side, the goal was 0410, nothing more, nothing less. What I do in my journal is I'll mark how many handles were we away from target. 2.5 handles, right? If it hits a minute later, I was a minute too late, it's okay. But what I'll ask myself is, when did I anticipate that occurring? What time was that? I think it was around here, apologies, but our target hit. Oh, beautiful, 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 beautiful. Minute above time. But what I'll ask myself is, what time did I predict it? Was it within a delivery schedule? It was. So this shows me, when I go back to my journal and I watch this video again, it shows me that the financial market is very much algorithmically driven. You can time it. You know when the rapid repricings will occur. It's manipulation. 3 drives or 3 o'clock opens, trades higher, takes out buy side. Does not stop us out. Very logical place to put your stop loss. I would have loved to put it here, but since we have such tough market conditions, preferably here or above that swing high. So anyways, it delivers to target, and you need to ask yourself, were you not right or wrong, but when did you expect movement? Did it occur when you expected it? What time did you enter? How long did it take from entry all the way to target? It took us 38 minutes. Was 38 minutes worth a 12 handle run? 12.5. Was it worth it? And also from that execution we took earlier on that short, beautiful as well. You need to ask yourself those questions. But that's the basic idea of what I do on a day-to-day basis, regardless of whether I'm long or short. That don't matter to me. But that's basically what I do. What I'm going to do is I'm going to just cut this video and then you can ask me questions. But I just want to post this for the people listening outside of what we're focusing on. And also, from execution, does it offer a potential 20 handles? And where will that 20 handles be? Right there. And you watch to see if it's going to deliver there. It's not guaranteed, but you want to watch that because you're still developing, you're still growing your wings. And notice what contract I'm on a micro and not a mini. So preferably you stay there. Beautiful tape reading session today. Enjoyed it.